Vertusio, the shout-out app for industries, businesses, and services.
What are the benefits of investing in startups? When you invest in startups, you are taking a considerable risk. But why do so many individuals and organizations continue to invest in them? Discover why investing in startups is a wise financial decision. Here are the benefits of investing in startups. Even though it is a high-risk financial enterprise, these investments have the potential for significant rewards. If you are still undecided, consider the following 5 points. Investing early yields greater returns. Getting in early is one of the most important reasons to invest in startups. With the introduction of crowdfunding, the hurdles to being an early-stage investor have been reduced. As a result, the lower overhead capital requirement, combined with the possible high benefits of an exit plan, is enough to entice investors. Portfolio diversification. Putting all of your eggs in one basket is not a good investment strategy. Investors use strategies such as portfolio diversification to minimize large losses in their investments. Portfolio diversification entails spreading your investments across various asset classes. As a result, financial risks will be greatly reduced. This is where startups may help. Startup investment is very different from traditional assets such as bonds and stocks. A bright future. When you invest, you are thinking about the future. It is all about securing the future and earning significant returns in the following years. This fosters an ever-changing world by fostering innovations that can be transformative. Investing in startups allows you to be a part of something bigger and become more active in the company's process. Although there is some risk, there is always some risk in any business. You can't avoid it. All you can do is limit risk by investing in a viable startup. Impact investing. Investments in startups not only contribute to creating jobs, but you also contribute to power innovation. Investing in startups is a terrific way for investors to directly impact and promote employment growth in their neighborhoods. Furthermore, companies typically create products and services that meet the needs of their customers. When you invest in startups, you are helping to foster innovation. There is a high likelihood of buyouts. Aside from investors, huge corporations are also on the lookout for startups. These firms typically acquire startups for 2 reasons. First, they look for startups that have the potential to be future competitors. Large corporations will acquire them instead of waiting for these competitors to flourish. As a result, if the startup you invested in sells for a high price, you will receive a high return on your investment. Innovate with young and ambitious entrepreneurs. Once established, the entrepreneurial spirit rarely leaves a person. Any aspiring or past entrepreneur can say that problem-solving, strategizing, and creating will always be required. Assume you're an investor seeking a method to get a taste of the thrills and excitement of running a startup, collaborating with other entrepreneurs to offer your unique thoughts, suggestions, and opinions. In that scenario, providing funds in addition to advice may be a great approach to accomplish this. When investing in startups, use these best practices. Knowing the benefits and drawbacks of startup funding is only the first step. Your next step will be to understand the best techniques for investing in these startup businesses. The steps below will assist you in maximizing rewards and mitigating risks. Take into account the industry and market conditions. Before deciding which company to invest in, you should research the industry and market conditions. Consider the current market conditions to determine which industries are hotter. It would be beneficial if you also research the demands of society. Be consistent. As previously said, as an investor, it is critical to exercise due diligence. When investing in a startup, you should look at the company's financial records. Take the time to investigate the startup's leadership and management team. The more you know about a firm, the better your investing decisions. Always diversify your portfolio. As previously stated, it is prudent to diversify your investment. The same applies to investing in startups. As a result, you should invest in startups from various industries, ages, and markets. Diversifying your investment will reduce the risk of financial loss while also maximizing possible profits. You can consider investing at various stages of a startup. Following investment activities. There are still things you may do to aid the firm after investing. You may keep an eye on the startup's finances, coach its management, and even get a seat on its board of directors. You can have a beneficial impact on the startup you invested in by doing so. Before investing in startups, first-time investors must recognize that investing in startups entails risks. Even though this investment differs from buying and selling traditional assets, you must still conduct due diligence. Conclusion: you should invest in startups for a variety of reasons. Investing in startups allows you to diversify your portfolio while also assisting in job creation. Investing in these innovative ventures has the potential for big profits. Finally, by making financial investments in startups, you may help make a social effect through innovation.
If you've enjoyed watching this video, then give this video a like and share with a friend. Also click on the subscribe button below to be notified as new videos are released.